Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Citic Limited latest report. Citic Limited is a diversified conglomerate that provides a wide range of businesses and services across various sectors. The company's comprehensive financial services segment offers banking, securities, trust, insurance, and asset management services to cater to the financial needs of its customers. In addition to financial services, Citic Limited also operates in advanced intelligent manufacturing, where it manufactures heavy machineries, specialized robotics, aluminum wheels, and other products. The advanced materials segment involves the exploration, processing, and trading of resources such as iron ore, copper, and crude oil, as well as the manufacture of special steels. The company's new consumption segment includes a diverse range of businesses, including motor, food, and consumer products, telecommunication services, publication services, modern agriculture services, and others. Furthermore, Citic Limited also operates in the new type urbanization segment, which involves property development, contracting, design services, infrastructure, environmental, and commercial aviation services. In terms of specific services, Citic Limited offers securities, trust, financial, and securities-related services, as well as consumer finance, resources, energy conservation and environmental protection, engineering contracting services, real estate development and management, and insurance and reinsurance services. With its extensive range of businesses and services, Citic Limited is a significant player in the Chinese market and beyond. And Citic Limited market capitalization of $344 billion is significantly larger than the average industry peer of roughly $16 billion. This shows that Citic Limited holds a significant advantage in their industry. Citic Limited trades at a lower price-to-earnings ratio of 5 times and a higher price-to-book ratio of 0.49 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Citic Limited itself. The company exhibits a very high leverage profile, with liabilities accounting for 88% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.72%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for a company can be identified through various indicators. On the growth side, operating revenue has increased by 3% year-on-year, driven by strong pipeline projects in new materials and robotics. The financial segment has also seen significant growth, with a 6.2% increase in revenue, while net fee and commission income has risen by 18%. Additionally, overseas operations have experienced a 28% year-on-year increase. On the other hand, some areas have seen decline in revenue. Profit attributable to ordinary shareholders has only increased by 0.9% year-on-year, indicating a slow growth rate. Interest income has decreased by 7.6%, while net interest income has dropped by 1%. The new consumption segment has also experienced a 3.4% revenue decline, and the new type urbanization segment has seen a 20% revenue decline. The company's performance in different regions is also noteworthy. In the Chinese mainland, revenue has grown by 1.8%, while in Hong Kong, Macau, and Taiwan, it has increased by 9.2%. Overseas operations have seen a significant growth of 46.6% in revenue. However, some areas such as interest income from deposits with central banks and non-bank financial institutions have decreased by 13.6%. Overall, the company's revenue growth is driven by its strong pipeline projects, financial segment growth, and overseas expansion. However, it also faces challenges in certain areas, including slow profit growth, decline in interest income, and revenue decline in some segments. Net income and profit margins underwent significant changes over the period under review. Initially, net income increased due to record-high profits from financial subsidiaries. However, a closer look at the numbers reveals that net interest income decreased by RMB 1.44 billion, while fee and commission income rose by RMB 14.15 billion. Despite this mixed picture, profit margins showed an overall improvement. The cost-to-income ratio decreased by 2 percentage points to 36.4%, indicating a better utilization of resources. Additionally, interest expenses for non-financial businesses dropped by 18%. These positive trends contributed to a slight increase in profit margins, which rose from 46.22% at the beginning of 2025 to 45.52% by the end of the period. The company's debt level and interest expenses have undergone significant changes. The consolidated debt of Citic Limited as at 31 December 2025 stood at a substantial $765,611 million, with borrowings from central banks increasing by a notable plus 64.3%. On the other hand, interest expenses saw a decline of 18% year-on-year, decreasing from 181,491 in 2024 to 158,379 in 2025. This reduction in interest expenses is also reflected in the total finance costs, which decreased from RMB 13,969 to RMB 11,337. However, despite this decrease in interest expenses, net interest income experienced a slight decline, dropping from RMB 148,373 to RMB 146,933. While the company's debt level and interest expenses have changed significantly, it is essential to note that these changes are not entirely uniform, with some areas showing improvement while others remain stagnant. The company's performance can be broken down into several segments and regions. On a positive note, advanced financial services stood out as a strong performer, with significant revenue and profit growth. New type urbanization management also showed promise, despite incurring a loss of only RMB 221 million. On the other hand, comprehensive services and new materials consumption underperformed, with both segments experiencing losses. Comprehensive financial services and urbanization management also struggled, with losses of RMB 9,532 million and RMB 1,275 million respectively. The company's operation management and advanced manufacturing materials segments were particularly disappointing, with significant losses incurred in these areas. Overall, the company's performance was mixed, with some segments showing promise while others struggled to turn a profit. Management's views on the company's outlook and strategy are centered around mitigating risks. They are prioritizing natural hedging methods to minimize market risks, while also employing prudent use of financial derivative instruments. Additionally, the company is focusing on credit risk management through a unified approach that includes monitoring, control, and collaborative efforts. These strategies aim to ensure the company's stability and resilience in the face of potential challenges. The company's financial history reveals a consistent commitment to rewarding its shareholders. One of the key ways it has done this is through dividend payments. As per the extracted summaries, there are multiple instances where the company has paid dividends, as mentioned on pages 5, 7, and 43. This demonstrates a clear intention to distribute profits among its investors. In addition to dividend payments, the company has also taken steps to return value to its shareholders through share buybacks. Specifically, page 43 notes that the company has indeed bought back shares, further indicating its focus on maximizing shareholder returns. That concludes the financial summary for Citic Limited. Feel free to comment below, and I will be happy to answer them when possible.